The big story we're watching this morning, it has been the hardest hit in Asian trade, hitting a record low against the dollar. I said this last week about the Chinese currency. How low could we go?
Yeah, good morning, Sam. It's obviously a verdict of the market that they don't agree with this so-called mini budget. And I think, indeed, it's a bit of a late 70s fiscal policy style, what they are adopting, going for growth, only, and on the other side, trying a very aggressive monetary policy. I don't think that will work, actually. And so I think there's more leeway for the pound to go down against other currencies.
So you were saying perhaps that Trussonomics threatens to undermine with this fiscal policy the BOE's efforts now to tame the inflation beast. Is that the case?
Yeah, I think the hump in inflation will be prolonged by that, and it makes it even harder for the Bank of England to fight inflation and tame inflation. So I don't think it's a good receipt or what they are acting for.
Gunther, it's Hadley out in Dubai. I mean, just give me a walkthrough of how you're looking at equities at this point off the back of what we've seen.
Yeah, actually, it's looks a little bit like a car crash in slow motion. What we are seeing here, we have some bright spots on the way, like consumer resiliency in the US. We have high savings rates. We have a bit of easing of delivery times and bottlenecks and supplies. But I'm afraid that the commitment of the central banks to really tame inflation, to suppress inflation, it's different from those times we have seen in the past. So the reaction function of, for example, of the Fed is completely different. They are really hammered down the message again that they are trying to tame inflation at the cost of a recession. And I think this has to sunk into the heads of investors.